Good afternoon, everybody. Hope you're doing well and having a good holiday break. Let's get into our weekly prep for the week ahead. We have a short week ahead of us, so markets close on Thursday, and all the other days of the week are normal trading hours. So we have the first of the year, markets will be closed for New Year's, and then everything else will be normal. Starting with some economic data, just looking at this, not a whole lot going on this week. We do have Fed meeting minutes on Tuesday, some jobless claims and PMI data on Wednesday to look forward to, and then PMI data on Friday. Outside of that, just end of year flows and start of the year flows. So we're in that quote unquote Santa rally currently that lasts through the first two days of the new year. And often you'll see some pretty heavy flows within different sectors. You also see some tax loss harvesting and things moving around in the market. So, in that period of time, if you're not familiar with it, you can expect to see what I would call is kind of less routine price action. Certain areas of the market may be hotter than others and disconnected from certain names. So, you can see some individual names feel a bit more disconnected from the market during that time, or just certain sectors even, catching a little bit more weakness or strength depending on where they're situated. So outside of that, any or as far as major market themes going on right now, we'll talk more about silver, but silver and commodities are moving. That's the strongest theme and narrative going into the end of the year. So we want to pay close attention to how that trade develops. Our goal is always to, trade the routine setups with our playbook and, go through technically what's looking good, but then be prepared and aligned for any top ops or major narratives or themes that develop in the market so we can extend gains in our portfolio and try to capture some exponential opportunities. So, we've had different ones throughout the years. And we've had some crypto plays this past year, some AI plays that have created top opportunities within our day trading playbook in those stronger themes. And it's been a little bit dormant into the end of the year, I would say, other than this silver and commodities trade. So that's really going to dominate the headlines and the focus for not just the markets, but for us as we look for trades within it. And on the topic of silver, like I said, we'll talk more about it when we get to the ideas. But it's been a little bit harder to day trade, so it's one of those clearly big opportunities, top ops, but there's as far as the individual day trades, I would say it's not been as clear unless you've been lined up with the theme for some of the gaps. We've seen a lot of gaps in the name, but that's starting to change. I think we're getting really close to some really good opportunities from a day trading perspective. So we'll talk a little more about that. As for where the market's at, big picture here, as Space Monkey pointed out in his note, just trading in this kind of upwards megaphone pattern. The markets are, continuing to trend higher. We've had a very strong year, and they're looking to close the year on all-time highs. So, the market has had some really nice days over the last couple of sessions, and then we had a bit of a rest day on Friday, even though we did make new all-time highs. We're starting to see some heavier positioning show up on the tape. That is to be expected into the end of the year, as funds and institutions are heavily active managing the books. So we'll from a technical perspective here, we're just one time framing higher in the near term. So as long as that continues, you just keep looking to the upside. I think things are starting to slow down a little bit as far as the last session was concerned. We've seen some very strong positive gamma kind of suppressing action a bit in tomorrow's tape. We're actually seeing some of that as well to the upside. It's a little bit more room to move lower if we want to go lower. It's a little bit more freed up in terms of positioning. And then higher is going to be a little bit more like going through mud. It doesn't mean we can't go higher. It just means that it might be a little bit slower and harder to do. So that's what we're looking at from a positioning standpoint. And technically, like I said, we're one time framing higher here. But what one thing I'd look for is if we break under the 6920 early in the session tomorrow, that could be a decent backtest trade to 6900. That's the previous all-time high, and it's a psychological level as well. And there's some room to move within this tape. So watch for a quick trade. I think that's day tradable for a move back down to 6900. And if we break that prior bar low, which is around 6900, we could see a bigger dip into a wider range of support here between 68.44 and 6900. For the upside, I would just continue to look at the prior day high and see if we can break through and hold above that. For individual names this week, I will say just before we go through, there's not a lot that I'm loving, honestly. I went through like 200 charts pretty extensively, and there's more names that are not on the list that are just better for common stock. Their shares are just easier, like TJX and some like IonQ to the downside, TJX to the upside. There's some retail plays out there that look good. Space Monkey put out a notice, some names. But what I would kind of say is it feels very average is my overall vibe outside of the silver trade. So with that, that just means that it doesn't mean that you can't trade or don't need to trade. Um, it just means in terms of sizing, make sure we're keeping things pretty controlled into the end of the year until something good shows up. With that being said, there are some setups that do stand out as decent routine technical opportunities. So we'll go through that now. Amazon, watch 232.82 for break to the upside. We have this kind of double, not quite inside days, but double digestion days here. And Amazon's trying to turn the corner after defending the 200-day. It's been a name that's had a hard time holding bigger gains, and it's obviously corrected pretty big, and then based, put in a higher low, defended the 200-day, and is trying to turn the corner now. So it does look a little better. If we can get through this spot, I think we can see a move into 236, 238 into the new year. Google. Google is a very similar look to Amazon in terms of the last 2 days. The difference is the higher time frame context. Google's been a leader, very, very strong stock this year, and it's been spending over a month now, basically, digesting the recent breakout over all-time highs that it had. So a lot of momentum came in the stock, and then it just slowed down and has been digesting gains for about a month now, and is trying to turn the corner after putting in a bit of a low just below 300. So you have this trend line resistance and this resistance at 313 from this period of support here in December. So there's some confluence at this level with two tight range days, basically inside days here. So a break outside of that looks really nice technically for a pushback up to 321.50. JP Morgan banks have been hot, moving really nicely. JPM has been one of the most recent ones to break out to new highs. And this is just one time framing higher here. So, wanted to keep a variety on our list for this week. If banks continue to get bought up into the end of the year, just look for this to continue. A break above priority high, very simple for continuation. And as long as it continues to defend the priority low, this is just one time framing higher, and you can look to capture that momentum and continuation to the upside. Netflix has been a harder trade, so you rarely see me talk about the upside on a weaker name like this, but it does stand out because of the end of the year context. I don't know, if it will get bought up into the end of the year or the start of the new year, but a lot of times you'll see some of the bigger stocks that maybe got sold a bit um, into the end of the year end up getting bought up. You kind of see like an inverse relationship sometimes, where buyers are looking to step in and catch a discount to start the year on a name that has been strong. It did have a good year overall and has been in a has made a very big move and has just been kind of stuck in this downtrend. So I kind of like the thesis of surrounding that. Of course, we need to see price action, validate some of those ideas, and in the near term, if it's not this week, it might be next week that we could see this idea play out. We're just we've put in a local bottom. We're trying to bottom here on Netflix. It's put in a failed breakdown of this 92.35 level. And we have a little bit of confluence here with the resistance and trend line at 95 roughly. And a break above that, I think we can kickstart a move back toward 100. And then, Netflix is one of those names that if tech starts to get sold a little bit or you see some themes shift in the market, it's been kind of like a counter trade. So, anticipating some of that being possible and just being ready for it. And Netflix, of course, if this just breaks back under 92, then the downside comes into play. But I think there's a decent opportunity, potentially to even swing trade this, maybe 100 calls out to February or something like that. Could be a nice idea. SLV. So SLV, I'll try to keep this brief. I'm not going to unpack the whole, macro behind the move going on here. But technically, this is one of those things that Yes, it's made a very big move already to this point. This is a very consistent slope, so I'm just going to speak mostly technically here. We already know that this is in play from a big picture, okay? So it's moving very, very nicely. It's been a harder trade, I think, intraday because a lot of these moves are on gaps. But this candle on Friday is like a day one candle. What I mean by that is often when you have a stock have a catalyst or a big gap up and then close on the highs, that's like a very strong signal for continuation the next day. The interesting part of this is the context is this is making that quote unquote day one candle at the highs after a very big move, right? So a lot of people start to view this as being maybe somewhat extended, but really this is like the start of another trade. It just happens to be much higher. So that's important to understand technically. If this starts to really stretch and become asymptotic, then we can like basically all that means is the rubber band starts to really stretch and then snaps. Then you can start to look at the downside. I think that'll be driven by either a catalyst, maybe at the start of the year, some of the tax things going on near term or as a short term idea, or one time framing breaking to the downside. That could also be something, or any other catalyst that could come out to kind of fuel a move to the downside. None of those boxes are checked though. So right now we just have to go with the upside and what's in front of us and not underestimate how high this can really go before it sees that reversion trade. That could be a couple days, it could be a couple weeks, it could be months. We don't need the good thing about being a trader is you don't need to know. We don't need to be, act smarter than we are, and that we can predict when that is going to happen specifically. We can do our best to understand the narrative and what's going on and some of the macro behind it. But at the end of the day, if you're going to make money from it, it comes down to how do you execute. And execution is all about timing and being a day trader, participating in the move and then managing your risk accordingly. So that's why I always kind of default back to this, from a technical perspective, while respecting and understanding the narrative. That's mostly just putting it in the qualifying it as how I'm going to size. Or I'm going to trade it how I trade anything else, but my size is going to be adjusted based on the strength of the theme and narrative going on. And I don't need to be a macro expert to know that this is very, very in play and the top up, right? So, with that said, guys, to simplify this for everyone, watch a break of the prior day high if we don't gap up, which we very likely will. I think in China there's this very large gap happening, and we're seeing this trade kind of explode. So we'll have to wait. It might continue to be hard intraday, and we might not get very good opportunities. But if not, if we happen to open somewhere around this prior day high, that would be the initial look. All right, and then if we obviously do gap up, we'll look for intraday patterns to form, maybe a give and go or something like that. It's in terms of reversion, like I said, I need more boxes to be checked and before I can look for that, and then look for an intraday pattern of some kind to set up to participate in that. There's plenty of examples from the playbook. If you have any questions on mean reversion, please just let me know. MSTR comes to mind, ASML, SMCI. There's a lot of really good examples of stocks that have extended and then put in an intraday pattern for after some of those boxes were checked and to participate in the upside. I think MSTR, gapped up after a very big move. The rubber band stretched heavily, gapped up to like 530, put in a bit of a intraday flag around 522, and then proceeded to drop from like 522, I think to like 450 or 20 or something like that in a single day. Okay, so there will be clear opportunities that will develop, but we don't need to get ahead of ourselves here. All right, so with all that being said, those are my thoughts on the watch list. Those are my thoughts on the market heading into the year. Like I said, just a reminder, short week this week, so theta is a little bit more impactful. One less day on the expiry. Nothing wrong with going out an extra week if that's, if you want more stable premiums on some of these ideas. Netflix, I do think, can be more of a swing trade. And outside of that, we'll take it one setup at a time. So hope you guys have a great rest of your Sunday and break. I'll see you all in the room like normal tomorrow.